Hello, this is Vinny here. Today this video it's about REITs ETF. Should you be investing in a REITs ETF? Basically to talk about what is REITs ETF and some of the few products highlight. Now if you look at the screen here, it's a document from SGX about REITs ETF that's listed in the Singapore Stock Exchange. But my motivation about discussing about REITs ETF was because I met up with a few secondary school friends. They asked me what am I investing for recurring passive income, and one of the things I talked about was REITs ETF. The Singapore government savings bond 10-year yield is trading about 2.4% right now, but REITs ETF on the whole, it's giving about 5 to 6%. In terms of dividend yield, we do have quite attractive yield for the REITs ETF. I have this document here that I pulled out from my email, and I thought that is a very good summary about REITs ETF. So these are the few REITs ETF highlights that's updated by SGX on May 2025. Right, few things. Number one is that the healthcare REITs ETF as the top performing REITs subsector. Now, so what are the healthcare REITs ETF? Top of the mind would be Parkway Life REITs. Okay, and also like what I said, right, is that the 10-year yield is at 2.4%. Now, these are the few REITs ETF that's listed in the Singapore Stock Exchange. We have CSOP, so that's available both in SGD and USD code. Now, if you take a look at the 5 REITs ETF, so that's 1, 2, 3, 4, 5. Only Phillip, which is Lion Phillip S-REITs, doesn't have a USD. So the other 4 has SGD and USD. Okay, on the highlighted green color, so we have the SRT, which is CSOP. That is giving the higher yield, that's about 6.32%. And then the higher in terms of AUM is Lion Phillip S-REITs. AUM means that the assets under management. So for REITs ETF, I do want to look for one with the higher AUM. Then, in terms of CPF investable, Nico AM, which is CFA, is possible to invest with your CPF money out for the ordinary account, and the rest, which would be CSOP, Lion, Phillip, and as well UOB, they're all available in SRS. That means that all 5 available in SRS, only Nico AM available in CPF ordinary account investment. All right, and you find that over the May returns month to month, it's doing not too good, not too bad, all right? But the 3 months return, you start to see a little bit more of the positive, all right? Now, one of the things that led to the discussion of REITs, right, was because that we know that Trump is looking to make the interest rate lower. So there are really talks about lowering interest rate. Traditionally, if you take a look at REITs, they are very sensitive as instrument to interest rate. The correlation would be if interest rate is up, then the price of REITs will be down. Okay, if interest rate is down, then the price of REITs is likely to be higher, because REITs borrow a lot of money to buy into their assets, which will be the property. So hence, they are very sensitive about current and future rates. So if future rates is going to hit down, then based on the correlation, I think that probably we might see a better performance of REITs in the coming year or maybe 1 or 2 years. Okay. But anyway, this is just my personal opinions when it comes to observation of correlations of REITs and interest rate. Now let's continue to look a little bit more in this document here. One of the product highlights is that the REITs ETF has a robust inflow. So money has been flowing into the REITs ETF. And if you know what is the REITs ETF, is that it doesn't only hold one REIT. So it does gives you exposure into various sector. So for example, if you are interested in office or hotels or commercials or hospitality or data center REITs, then instead of buying REITs across all different sectors, you could just buy one ETF. And that would give you exposure into the various different sectors for REITs. Okay. Now, then something which I find that is a little bit more interesting is the yield. The 12 months dividend yield for the first 3 REITs here, it's in the range of more than 6%. Okay, so this to me is interesting because, we have inflation, and as well as we have the FD that's really heading down. Well, REITs does gives a better return in terms of putting the money inside the FD. Of course, then again, as I said, right, there are risks involved in buying the REITs because it's just like trading like stocks. Okay, now let's take a look at the dividend yield across the 2018 to 2024. So historical 12 months dividend yield in 2018 is about 3.6%. That's because price of the REITs went higher. So REITs has been correcting. Later we can just check out one of the charts here. And in 2024, the REITs historical yield is about average, it's about 5% to the high of the 5. So it's been steady for quite a while already. You do have, like what I said, in terms of sector allocation, we have the industry REITs, and as well as diversified REITs, office REITs, retail REITs, and one of the key sectors that I'm really very interested in is the data center REITs. Okay, and as well as I said, you are able to receive the dividends either quarterly or semi-annually. So let's talk about, for example, the one with the larger AUM. Okay, do you receive that in the February and as well as August? So for example, right, if you were to buy right now in July, so this is the July right now, then you are able to receive immediate payout in August. Okay, so that is to me one of the benefits of buying the REITs if you are looking at time and you don't want to wait too long. Okay, and of course, this document I will just attach in the link below. All right, but then this records the individual REITs that I talk about and their trading conditions. Okay, I thought that these would be beneficial to you, but then let me just check out the prices of some of the REITs. This is the price chart of CLR Lion Philippe S-REIT, as is the one with the highest AUM. I've included the chart without adjustment into dividends. That means assuming that you don't receive any dividends. So this is the raw price of the chart. As you know that over the years, prices have been declining. You see that this is a weekly chart and it's in that declining trend. However, if you can pick each time at the bottom, yes, you do get quite a nice appreciation if you can pick the bottom. Now what I'm going to do is I'm just going to adjust this for dividends. Okay, that means that if you have been buying and then holding this for dividends, and then this is how the chart looks like. In other words, if your purchase price has always been in the region of, let's say, 75 to 80 cents, then, and if it goes up to 87 cents, where you'll be able to make a gain in terms of appreciation. But if you don't sell, then you're not too worst off, because then it's probably in a ranging situation. So your gain is not fantastic, but you are in that ranging situation here. This is more to say that in terms of REITs, yes, we do really need to time our entry, especially to the movement of interest rate. All right, what I did is to overlay Singapore government bonds 2-year yield at the bottom. The idea is that if the yield is attractive, then more investors would want to invest in Singapore government bond, because this is regarded as one of the safer instrument. But if, let's say, the yield is not attractive, then investors would be in search for other avenues to give that return, right? And in this case here, what I like to do is to investigate the relationship between the SG bond yield versus the price of the REITs. Okay, so we saw that if the yield is low, so that's where it's low yield here, then of course the interest rate is assumed to be low, and as well as people do not prefer to invest into the bonds, because if you invest in bonds, you get probably 0.5%, but if you invest in, let's say, REITs, right, you might be receiving 3 or 4%, which is so much higher. So when the bond yield starts dropping, so that means this period here where it starts dropping, this period here, right, we start to see that the REITs actually increase over this period of time. So that's the correlation. Of course, to mention that this period here was 2020. Why was there a huge plunge in the REIT? And that was COVID. Now, when the bond yield is at the high, so this was a situation where the bond yield is at the high, then you wouldn't want to invest in the REITs, because you want to invest in the bonds because the bonds gives a higher returns, right? Versus the risk of investing. So for example, if let's say the REITs is given 5%, but the bonds is giving like 4%, then the differential 1% might just make you choose the bond because of the risk factor. Okay. However, one of the trend that I want to bring up is that it's probably make a lot more sense if you start to see that the bond yield is declining. That means the first point where the bond yield starts to decline. Okay, why do I say that, right? So this is the point where the REITs is at its lowest price or lower price. Okay, because this is where investors are looking at the switch between attractiveness and the REIT price versus the gain in terms of the two different instruments. So when it starts to decline its interest, right, then investors will say, okay, I do not want to look into bonds right now because bonds is going to give me lesser interest in future. I want to go and find a cheap instrument that gives me a higher return. So in this case here, probably if you look at correlation, then that's where the REITs is at its lower price range. Okay, so take a look at right now. We saw that basically there was a range in terms of the bond yield from 3% to 3.5 for a period of time. And right now we start to see that the bond is heading down. So I won't say that this is just the starting phase of its heading down, but it's definitely on its way lower, not into the 0.5 region, but it's starting to be heading lower. So that's where we probably find a little bit of a stabilization in terms of REITs price. Okay, so let me just draw that relationship to you, right? In terms of where we saw this bond yield starting to head down in this region here. If you I can't switch this up, but then if I just extend this, you find that the REIT price, it's near to the low. This is the adjusted price with dividends. Okay, and recently there was also another one more drop here that's around this price here. We see the REITs actually spiked to the low and then rebounded. Okay, so all in all, as I mentioned, the price of the REITs, I think we need to track the interest rate. And instead of just looking at the pure interest rate, I've just decided to choose to look at the 2-year Singapore bond yield. And that the nice thing is that it is still on its way down. Okay, all right, so if you want to download this document, remember to just click the link which I have attached in the comment section. And as well as if you like me to discuss more into other investment products, do let me know and leave a comment. And otherwise, I hope that you can subscribe to this channel if you find that whatever that I've shared is useful. Thank you very much.